Welcome everybody to VTS Options. So a little bit different format here today. I'm not going to be editing or scripting this video. I just want to open up the email that I just sent out to the VTS Options community and actually take that trade live for you to show you a couple of things. And first of all, just how easy it is to take options trades in your trading software. It's really only a minute or two once you get used to it. But the other thing is, so you can actually see what's in my emails every day when I send out these trades. Now, there is a free trial on the website. You can sign up for that and you can see a couple of weeks of our live trades. But this email will also give you a pretty good idea of what they are like when they go out. So I'm going to dive into my software and actually take this trade live. So the format of my daily emails is always the same. And like I said, executing trades really only takes about a minute. So this video is obviously going to be a lot longer than that. But if a person just wanted to get the trades done, that would take no time at all. Today, I'm going to go through all the individual sections and really cover it in detail. But to follow VTS options could be as simple as 1 minute a day if you really wanted it to be that way. But we can start up here with this top section. This is where I list all the active advanced option strategies that we have. And you can learn more about this in my other videos, but essentially the way that I trade options is I like to trade them from an individual strategy perspective. So for example, the Condor calendar strategy, I generally trade this as an independent standalone strategy. The same with the Vol Step, the Wheel of Fun, all of these are considered individual strategies. And then when I combine them into a diversified portfolio, that's when they add the layers of protection so I can reduce the drawdowns and make a nice stable rate of return. So today's trade, as you can see, it is in the Qs, and that is for the directional flies strategy. That's what we will be trading today. So the next section is just a little bit of a blog entry. Usually I give my rationale for opening this trade. And the reason today is essentially that the Qs have reached an all-time high. Everything's going pretty well in the market. And as a result of that, all my other strategies within the VTS community, we find ourselves long equity, short volatility. So now is a pretty decent time to start layering in some trades that are maybe not quite as directionally biased. So that's what the blog was talking about here. But let's go right down to the trade details and we can get into what we're doing here. Now, side note, this all may look pretty complicated, but trust me, once you see a few of these, you'll know exactly where to look and you can get these done very quickly. The reason that I do all of these emails is because I am a very thorough person and I do focus a lot on education as well. So I want people to know exactly what I'm doing, why I'm doing it, the rationale, the risk management, how we're going to do everything. The emails are pretty detailed, but there's a couple of things here that if you really knew what you were doing, you could just filter through all the other stuff and get right to the trading. So don't be intimidated by that. But here we are, trade number 124, we are doing a broken wing butterfly. All the details we need for this trade are listed here. We've got the strike prices, the expiration, and then a picture down here of what the trade will look like. So I'm just going to go ahead and open my Thinkorswim platform here, and we're going to start inputting this data. So this is the Thinkorswim platform, and I'm going to go to this trade tab. Your software is probably similar to this. It won't be exactly the same, but all the functionality of all the trading platforms is roughly the same. So you can see for this email, we are looking for the 15th of January 2021 contract. So if we go to the option string here, that's going to be this one right here. We're going to open that up. The puts are on the right, the calls are on the left. So we are doing a put broken wing butterfly here. We're going to scroll down to the at the money. And I'm just going to open up here a butterfly. We're going to adjust this as we go, but that's the base trade. Now, the first thing that I would do is I would make sure that the strikes are correct. So we're selling the 305, and then we are buying the wings of 315 and 300. So if I make those changes here, you'll see what this trade looks like. So first of all, we're going to do a 315, and we're going to do that 300. And this is what the trade looks like. I've also built it over here. So it's a broken wing butterfly. Here is today's price right there. And our butterfly is centered right around the midpoint. So we do want the Qs to basically remain flat. But like I said, because we are at all-time highs, that's why we're going to do the broken wing butterfly and just make sure that our downside is fully protected here. We are essentially shifting all of the risk from the downside to the upside by breaking that wing. And instead of doing the 295 to make it an even trade, I can actually just show you that. This is a standard butterfly. We are just breaking the wing a little bit just to make sure that we're shifting the risk so that there's nothing negative happening on the downside. Again, essentially my broad portfolio is long the market right now, so this is a pretty good offsetting trade. So go back to the trade tab, and this is where we're building our actual trade that we're going to execute. And the only other piece of information we need is actually how many contracts we're going to buy. And for that, what I do in all of the emails is I go through the margin requirement of whatever the trade we are doing. So in this case, this is a debit spread. We are paying a premium to open this, and the margin requirement for debit spreads is essentially just the premium you are paying. So in the email, I don't know exactly what the price will be. They're going to vary throughout the day depending on when you're executing your trade. But for me here, for right now, it says 341, 343. This is going to be bouncing around. But you just multiply that by 100, and that's how much it's going to cost to open one contract. So right now, at this price, 344, it's going to cost about $344 per contract to open one of these. So then we just have to scale it to how much money you actually have. Now, what I do within the VTS options community, because I want to make sure that everybody, even people trading on smaller account sizes, I want to make sure that everybody can participate. I do everything within the VTS options emails on a model portfolio of $10,000. So I make sure that all of these trades can be done in the exact right allocation for somebody who's trading on a portfolio of just $10,000. Now, some of you might be on $100,000 or $500,000, whatever the value is, but I do want to make sure that everybody can participate no matter how much capital you have. So on a $10,000 model portfolio, you can see if we continue down here, allocation size, I'm dedicating 5% of my portfolio to this trade. So if we go back to here, out of $10,000, I am dedicating $500 to this trade. Now I can get out a little calculator here, probably not needed on a base of 10,000, but just to go through the numbers, if we do 10,000, and we are looking at a 5% allocation, right? We're looking to spend $500. Now this trade currently, it costs about $343 per contract. So we can divide by 343. That's how much it costs for one contract. And there you go. On a model portfolio size of $10,000, this trader could open 1.45 contracts. Now, of course, with options trading, you always do have to round down to the closest one contract. So in this case, instead of doing two, we would be rounding down to just one contract. There would be a little bit of extra cash there, but let's say if a person was trading on an account size of $50,000, right? 50,000 times the 0.05, the 5% allocation, this person has $2,500 of available capital for this individual trade. They would divide by the 343 per one contract. This person can open 7.28. Again, they would round down and they would be opening 7 contracts of this trade. But for my model portfolio of $10,000, it is just one contract. So this is the trade and it is actually ready to go. From this point, all I would have to do is say confirm and send. For Thinkorswim, and I'm sure your platform is the same, it's actually going to give you the details and ask you if you're sure if you want to execute this trade. And I can just check it, max profit, max loss, buying power effect, 347. So the contract size plus the commissions, about 347. Everything looks right to me. I'm going to go ahead and send this. Now in Thinkorswim, okay, I was expecting it to take a few minutes, but typically what I was going to say is what I would do is I would go into this section. It would have been in working orders, but it actually filled quite quickly. So what I would do here is I would look at this trade and you can see the mark price and the price that you're trying to get, and then you want to get this trade done. So you would execute the trade. Sometimes it doesn't go through right away. So what I would do is I would let it go for about 30 seconds, see if it's going to go through, see if that computer will match up the prices for you. And if it doesn't go through, then I would start dropping the price by about, or in this case, because we're buying, I would increase the price by about 1 penny. All right, so instead of 345, I would go up to 346, wait 30 seconds, go to 347, wait 30 seconds, and typically you're going to get the trade done pretty quickly. In this case, of course, it clicked in very quickly, and now instead of this trade as a simulation, we can see now I actually have this trade live. So now I have one contract of this broken wing butterfly. You can see today's price is right in the middle, and our break even at expiration is over here. Now I won't be letting this trade go to expiration. We can go down here to the risk management section, and sometimes I'll use stop losses and other times I won't. So today for this trade, I mentioned that because broken wing butterflies, and butterflies in general, they actually don't start profiting until you get closer to expiration. So with these specific trades, it makes more sense to just sort of play it by ear, monitor it day by day, and decide when you're going to exit the trade later down the road, whether for profit, hopefully, or a loss if necessary. But there won't be any stop losses set for this specific trade. Now, again, like I mentioned, this is all being very thorough, but if a person wanted to, they could have just gone in, entered the trade, got the thing done within a minute, and gone out about their day. But if you do want to focus on the education, that's what the entire email is for. So you could start by understanding how I piece all these strategies together into a diversified portfolio. There's a blog. Sometimes I'll explain at length what I'm doing. And other times, like today, there's really not much to say. I'm just trying to get a little bit of market neutral, maybe a little bit of downside exposure here. And that's all I was doing. And then we can go through the margin requirement, risk management, allocation. Makes it very easy for you to calculate your account size versus how many contracts you're buying. And then again, if you want to focus more on education, I will go through the Greeks as well for every trade type that we do. So broken wing butterflies have a specific set of Greeks, and you can see how this trade is going to respond over time. So we can go through that here really quickly too. Delta, you can see if I hover over today's price right here, it says minus $8. This is a delta negative trade, which means we want the price to go down in order to make our profit. And that makes sense. You can see it right here. So hovering in the center range is profitable, but down is also going to be profitable. So this is a delta negative trade. If we talk about theta, again, we are theta positive. Every day that goes by, we are going to be making a little bit of money on this trade, $1.19 as of now. Now that doesn't sound like much, but it does build exponentially over time as we approach expiration. So being theta positive does mean that this trade makes a little bit of money each and every day. Then the last one is Vega. This is a Vega negative trade, which means we will benefit if volatility decreases over the next, say, 1 month. And since volatility right now is still at a fairly elevated level, this is also working in our favor as well. Having a Vega negative trade right now is probably a pretty good skew because volatility, the VIX is still at 20, our volatility metrics are still elevated. So having that negative delta, that negative Vega, it's probably the right side of the trade to be on right now. Going further than that, there's volatility metrics. Again, this is education only. You don't actually have to understand what these mean, but I have a full comprehensive volatility index that I have created called the Volatility Barometer. There's actually a video on the on the YouTube channel that you can go through. Let me just try to find that for you here. This one right here, the VTS Volatility Barometer, you can check this out and learn what it means and how it can help you in your trading. But that's just a side educational thing for people. We've got the VIX, we've got the front month M1 future. The relationship between these two things, that is of course something we talk about a lot on this channel. And just markets in general, it's very helpful for all of your trading. Even if you're trading stocks and bonds, it's very helpful to have a volatility skew towards that. And then lastly, the historical volatility, the realized volatility of the S&P 500. I just like to record these just to know when I'm opening and closing my trades and what general level of volatility there was, so that when I'm looking back on my trade log in 6 months or a year, I can actually see, okay, I was opening this broken wing butterfly during this level of volatility, and I can start to get some patterns and I can learn from both my wins and my losses. I can see the Greeks that I was trading butterflies in, what ranges were successful for me and what were failures. So I like to have all this data. But again, this is just additional education that you don't always have to look at in every daily email. And then if we go down further, we've got all of our current positions. Highlighted in red means we're closing. In green means we're opening. There's the QQQ trade that we're opening today, so it's highlighted in green. You can see a couple of these other ones. We've got a short put right now, a naked short put on the UVXY. This, while it is not intuitive for people when they first look at this, well, why would you be short a naked put on the UVXY? This is actually a short volatility position for me because the follow-up strategy involves the UVXY going down and us selling covered calls to generate more premium. So this is essentially, while it's not totally intuitive, this is intending for volatility to slowly bleed down over time. We've got an iron condor opened, fairly self-explanatory, market neutral trade there. And then we've got a long put vertical. This is part of the vol step strategy, where we are again trying to see the UVXY go down over time and profit from that. And now today we have a directional flies position as well. So if we go back to the very top, we can see those here, our iron condor, our vol step, wheel of fun. Right now, earnings plays aren't great because volatility is fairly elevated, but we might get into a calendar roll tomorrow or maybe early next week. And then we'll have a good representation of individual strategies that when combined together, they make a diversified portfolio. And then the last thing I want to mention really quick, there is a video, a supplementary video for every trade that we take. Now, if you clicked this video, I can actually find it for you here as well on the YouTube channel. It's this one here. If you went into this one and watched it, the example that I use in the video isn't for this trade today. This is just a general structure of a broken wing butterfly. But if you ever open the email and you're not quite sure what the trade is, well, what is an iron condor? What's a butterfly? How do we do naked puts? There's always going to be a supplementary video for you so that you're not in the dark and you can take these trades with confidence, knowing that you've got the education behind it to actually be doing these. So that's pretty much it. That is the daily trade. The last thing that I just want to mention quickly as well, because I do think that it is important, is that I always take my trades very near the market close. Now, the only reason I'm doing this today is because I'm making a video for everybody, so I wanted to give myself some time to execute. But I do think it's important for me to mention that I always take my trades very close to the market close, so I am basically the last in line of all of us taking our trades. I don't have one of those services where I'm trading low float stocks and then I send out a text message saying, here's the trade that I just took, and then I'm inviting hundreds of people to get into the same trade. And of course, that's going to benefit the person who is first in line taking those positions. So in order to combat this front running that a lot of people out there are doing, I take my trades last in line, and we always trade fully liquid products. You can see the QQQ. We always trade products that will not be affected by the volume that we are taking. Because when I send out a trade, not bragging here, but we have a large community. And when I send out a trade, it's really going to affect the number of contracts that are traded. So we have to make sure that we are trading large ETFs, large stocks, things that aren't affected by that volume. So today, it's fairly early on in the markets. I executed my trade, but again, normally I would have been last. And I do think that's important to mention. So that's it. Like I said, it could be as easy as 1 minute. You could just look at the email, get straight to the information you need, and execute your trade. Or you could focus on more of the education, take 10 or 15 minutes, go through that email, check the risk management, understand how it works into the broad portfolio. Remember, we're taking several strategies that are basically standalone, and then we're putting them together to diversify everything. And that's how I protect against drawdowns and keep that portfolio growing over time. So it's totally up to the people who are following. They can do it quickly, or they can get the full background of education, plus all the supplementary articles and videos. They're in every one of those daily emails. So there's always something for you to learn here. You can email me, you can ask me questions. And if I do get the hang of this live stuff, can't guarantee, so don't hold me to this. This is totally out of my personality. I do like to have everything edited, so if I say something stupid, I can go back and cut that out. But if I do pick up the courage here, I might actually start doing a few live streams where people can actually ask me direct questions. I've got a trading account there that has a little bit of play capital in it, so we can take some trades during the stream. That might be kind of fun for people, but we'll see how this goes. I'll rewatch this video again, and I'll just see how embarrassing it was. But let me know in the comment section down below if you appreciated videos like this, if the format works for you, if you wanted to see more of these. And of course, lastly, this isn't an advertisement or anything, but there is a free trial on the website. You can check out the VTS Options community, follow our trades for a couple of weeks, live, no commitment. If you like it, stick around. If you don't, no harm, no foul. So thanks for watching. See you next time. So if you're interested in options trading, go claim your free 2-week trial on my website. In that time frame, you'll definitely see a wide variety of trade types: iron condors, strangles, calendars, earnings plays, pairs trading. I have many profitable strategies that you'll be interested in. Come join the VTS community.